Just a few hours ago, XPENG reported its full year of 2022 results. It's super interesting. We're going to look into the report and see if there's anything we can learn from it. So if you're interested, stick with me. It's going to be real cool. XPENG's fiscal year of 2022 is really a mixed bag. There are a few things that are really good. The company performed good in some areas, and then there are some areas that the company really did bad. I tell you just right away, their yearly numbers aren't too bad. They kind of did okay year over year, but quarter over quarter, it was really a big disappointment. But let's jump over into the report and let's see what we can really learn from it, and we'll go through it step by step. So we can see the report is brand new. It was just released today on the 17th of March 2023. And the first thing straight away that I would like to jump into are their total deliveries. And what we can see is that from last year, 2021 Q3, all the way to Q4, they were kind of building up momentum and they were doing really good. And then we had a little bit of a stallment in Q1 and Q2 of 2022 at around 34,000 cars. But since then, the numbers really collapsed, and we can see that the Q3 was at 30,000 cars, and just now the Q4 ended up at 22,000 cars. And that's extremely disappointing because that's roughly half of the cars that were reported a year earlier for the same quarter. And that's a drastic problem that's developing here for the company, because if you're selling like 50% cars less than you did last year, that's kind of a bit of an issue here, right? And of course, it's represented in their numbers. So if we look a little bit into the numbers, we can also see that, of course, revenues were dropping, right? We see that we earned 5.14 billion renminbi, and that's 40% less year over year. That is massive. And we see here again what I've just mentioned. Quarterly vehicle deliveries, right, are down 47%. And I gotta say, for a car company, their main business is selling those cars. If your cars are down 50% and your revenue is down 40%, you have a serious issue on your hand. Also, jumping over into the gross margins, we can see that gross margins have fallen 3.3%. So again here, that is a lot, because XPENG was always kind of good because they had that kind of gross margins of roughly around 10 to 11%. So they were kind of good for that, right? But now we see that also XPENG is losing their gross margins and they're decreasing quite fast. But as I mentioned earlier, the yearly numbers do look a little bit better because, of course, before the Q3 of 2021, they really produced very few cars, right? So we're still benefiting from the Q2 and the Q3 of 2022. And we see that the yearly deliveries of vehicles actually increased to 120,000 cars. And that's a good performance. There are only a few EV car companies at the moment that can deliver those kind of numbers, right? So that would be, generally speaking, Tesla. Obviously, they're producing 10 times those cars, right? There is BYD. They're producing, the very high number of cars, also in the millions, right? And then we've got NIO that is kind of trying to reach that level. We've got Polestar that is kind of okay. And all the others are not really able to deliver those numbers. So on the amount of cars that XPENG is delivering, they're doing a good job. The problem is just that it's decreasing. And that's definitely an issue. Looking also into their full year revenues, right, we're talking 26 billion. And also here again, that is a nice increase from what they've sold last year. So the yearly numbers are okay, but the quarterly numbers are really in trouble. And the big question comes up, of course, if it's a deterioration of the whole business, or if it's just a quarter or two of bad performance, and if XPENG after that can actually recover and start to produce more cars again if their demand comes back up. Now let's jump over into the financials and see if we can get some more information and more details in their financial statements. So we see for the year ending of 2022, we see that they made total revenues of roughly around 27 billion renminbi. That's really good. They do of course have high cost of sales of 24 billion renminbi, but we can see already what is a very good pointer and why people generally like Xiaopeng is that they're profitable on gross margins. So their gross profit was around 3 billion renminbi, which is roughly around 450 million US dollars. So their performance in general is good. It's one of the few EV companies that are actually profitable, at least on a gross profit margin, right? They're not paying more to produce a car than what they can sell it for. So generally that's a really, really good point here. But we can see there are a lot of other expenses coming in, especially, selling and administrative expenses, right? They pay a lot of money to promote their cars and so on. And there's also a big expense on research and development. So in total, they still have a loss from operation of roughly 9 billion renminbi. And that translates into roughly 1.3 billion US dollars. So they're still very unprofitable on the bottom line. Now they also have decreasing sales. And I think as investors, we need to really take a look at the big picture here. I think what we're seeing is kind of a filtration in the EV market. We're seeing companies that are starting to perform really, really good. They're starting to gain market share and so on. And then we have companies that are starting to lose market share. And I don't want to be too pessimistic on Xiaopeng, but I worry personally that Xiaopeng might fall in the latter category, because the way it looks at the moment, it seems that they are starting to lose market share. Sales are decreasing, they're still very unprofitable. They've got roughly around 4 to 5 billion US dollars on their balance sheet, but they're losing like 1.5 every year. So, it's not really a liquidity problem, but at one point they maybe have to refinance themselves. They need to get more cash. They need to issue bonds or whatever, something like that, right? And I think that in a year or two, there will be a clear kind of divide between those EV stocks that made it, that are successful, they're going to be very good, and those EV stocks that are just gone. And, with Xiaopeng, I think there was too much focus on other stuff than EV cars. They were talking about, flying cars and all this stuff, It's just a fancy word for helicopter, and they pushed a lot of research and development costs in there, and they're trying to promote that stuff, and, now already nobody talks about it anymore. And it's just, from my point of view, it's a bit of a waste of money. They would have better used that money for other stuff. But, at the end, only time will tell really what's going to happen. I just wanted to give you a quick update here with this video, so you know a little bit what happened with the full year report, and you're well informed to continue your investment journey. I hope you guys enjoyed it. If you did, smash that like button, subscribe to the video, and then see you next time.